All right, guys, what's going on, everyone? Good morning. Welcome to Stocks and Coffee. As usual, let's get our shout outs in. Let's see who's in here, where you're from, and what you're drinking. Tim knows the drill. He's already got it in here. Tim's got the dark roast from Chicago. Abilesh, what's going on? We got to get together soon. Hope you're feeling better. Will, what's going on? From Jacksonville, drinking his Kona brew. And today we've got a lot to talk about. It was a big week. We're going to talk about, as usual, our top-down approach, looking at what's going on in the market. There's some interesting developments in terms of industry analysis and what's moving. We usually don't focus on one stock, but we're going to really kind of dig into what's going on with Tesla because it's an interesting phenomenon when you get a stock that's overreacting to near-term news. And the interesting thing with Tesla is it really interesting? Is it really just near-term news, or is there something deeper going on? But we know the whole Elon Trump thing has impacted the company as well. Some stocks on watch, and then we'll do a Q&A if you guys have any questions. And then, of course, you guys know many of you are members of Swing service or have been, but there's a 14-day trial. You can go to Bulls on Wall Street Swing Trading. I'm going to just put the link in the chat right now. Of course, you can do the 14-day free trial or just join. And I'm going to put that link in here. And I'll be throwing in a few other things in here related to some of our watch lists. But of course, you can check that out as well. And this link should not be in there. This is over. All right. Let's see who else is in here. We got a big group this morning. I think I stopped at Will here. Blair, what's going on? We've got Richard, what's going on? Drinking kombucha. I've never tasted that in my life, but it doesn't really appeal to me. Brian, what's going on from Vancouver? We got Ron from Jacksonville. Freddie, what's going on from Miami? We've got Indo drinking his Starbucks. What's going on, Indo? Yeah, we got to get together. Shoot me a message. I don't think I got your last message. Raju, what's going on from Atlanta? Steve from Boston. I think Will and Ron know each other. Daniel, or is it? Sorry, Darnell from Orlando. David from Canada as well. All right, we've got Darnell is drinking his South American blend. Santosh from LA and A-Rod from Chicago. All right, let's get to it. We'll get out of here pretty quick so you guys can enjoy your weekend. But there's some stuff we need to know in the market to plan for Monday. And let's go ahead and do that together. Let's take a look at the overall market here. And if we pull this thing out and go a little long term, we know we're in the midst of this bigger uptrend. If we really pulled this thing out, we see in an uptrend since 2009 with some kind of mini bear markets in between. And we came out of one in 2022 here. And of course, that really quick, it's hard to call this a bear market because it was so quick, but technically it is when you consider the percentage gain that dropped. But all of these have recovered very quickly. And we recently had a big move down, a reaction to, of course, the tariff news. Notice the market was already extended. It's interesting how these things react to news, but usually they're happening when the market has been very extended already. Of course, the 2022 top, the pandemic here, and a lot of other these deep pullbacks, they happen when the market's getting very extended. So when the market's getting extended, you always want to be careful because news can really hit the market differently than when the market is not extended. But anyway, we had the tariff news, the big decline. If you remember, when we were going through this, we were cautious in terms of near-term trades, but we kept saying that there's going to be an opportunity. We're expecting a capitulation event, and we got that right in here. We've traded this capitulation event. We actually did very well through the decline in terms of understanding that we shouldn't be buying every dip. just take a trade here and there, and we did pretty good. And then we called a capitulation, and then we've been riding this wave here really well. So it's been good trading essentially through 2025, which seems odd when you think of how volatile the market has been. But for us, it's been a really good 2025. Now we're dealing with some back and forth, and this is kind of a tough spot in here. It's pretty easy when you see a big downtrend, a big uptrend, but when you get that consolidation, there's often a lot of chop, and there's this tendency to overtrade in this area. Most of you handled it really well. I know a lot of you in here and know how you've been trading, and you want to be cautious. You want to take your positions. In terms of your overall outlook, it should be still that bullet. Whenever you see a range bound action, your outlook should be with the trend, whatever that previous trend is. If it was a big downtrend and you're consolidating for 2-3 weeks, your bias is continuation of downtrend. So you'd be at that point slightly bearish. We're slightly bullish here. Obviously, we're back on uptrend. We've cleared all of the resistance levels except the all-time high. So we're essentially back on uptrend. And a couple of other things is not only are we back on uptrend, but every time there has been a news event that would concern the market has taken the news much better than it was. A lot of the news we've had in the last 2-3 weeks is the same news we were getting in here, but the market was very sensitive to it here. The market has gotten used to it now. It's kind of numb to this news. And it's seen that how the market tends to react to this news. So the market smartened up that every time there's a little tariff thing that comes out, the market doesn't have to panic. Maybe there's a little bit of a pullback, but not like there were before. This whole Elon Trump thing. If this happened here, this probably would have sent the market down. Now the market doesn't even care. It's like it's almost a joke. So the market is essentially ignoring all of this kind of news that we're getting. On top of that, there's been some decent job numbers, and then also inflation news as well. So because of that, I think we haven't seen any deep pullbacks as well. But it is kind of typical May-June action in that we're range bound here. But again, slightly bullish. Our expectation is we're going to break out. And this is kind of almost a mini breakout. It's not what you think of as a breakout. It's low volume, very tight candles, which we usually don't want to see on a breakout. But we are breaking the range a little bit, and maybe we continue to float higher here. But I would say our outlook is slightly bullish. Most of the trades we take are going to be to the long side, and we can take a few here and there, but I wouldn't get too aggressive. And we've got a number of positions on right now. And then the positions you do take, I would be using a little bit of a looser stop than normal, as the market kind of, we still don't know if the market is range bound and pulling back and running, or are we going to break out here? So I would use looser stops as well on position. So that's kind of the market outlook. And if we look at the Qs here, we see something very similar. Now let's talk about what's going on under the hood. Of course, these indexes give us a general idea, but they don't tell us everything, right? Those of you guys who know me, as a broken record, but SPY and Qs are not equally weighted. Apple, Tesla, big techs are weighted much more, especially when we think of the S&P 500. It is 500 stocks, but the top 10 holdings, which is essentially big tech and a couple of others, make up 35% of the index. So we want to get a better outlook on what's going on in the overall market. So one thing we can do is look at IWM, which doesn't even have most of those stocks and is small and mid-cap stocks. How's IWM doing? And if we look at IWM here, it has handled this run-up very well. It's been either paced with the market or at times leading the market. And more recently, it's really breaking this range much stronger than the Qs and SPY are. You can see here, this is a gap breakout, still a tight candle, but a more clear breakout than SPY and the Qs were doing. So that's a good signal that the underlying health is good. I like to look at some of the more speculative ETFs too. If we look at software, we can see software is near highs. Cloud here is near highs. AI, whoops, wrong ticker there. I think that's it. There we go. Look how strong RD has been as well. And then one of the more speculative ETFs would be the ARK ETFs, and we can look at ARKK. And there's a number of ARK ETFs to look at, but this is their main one. And if we see here, this thing broke out on Friday. So these are all good indications that the underlying strength of the market overall, as we're in this range-bound action, is good. And then we were talking about the equal weights on the S&P 500. We can look at RSP. And while overall it's lagging and that's not as close to the highs, that's because it was a deeper pullback during the rundown. It has been keeping pace during this consolidation. So overall, the underlying kind of market breadth is telling us that, again, our slightly bullish outlook is verified. That is, we don't have very many concerns as the market consolidates. And whenever you get these consolidations or maybe even pullbacks, that's what you want to assess. Is this consolidation, is this pullback something to be concerned about? Or is it just natural price action? Anytime you have these big runs, there needs to be some consolidation before the next move higher. And that's what it feels like right now. So overall, exactly what we want to see in the market. Now the question is, when do we break out of this? If we are going to break out of the range, when do we break out of this range? There's a few things to think about related to when we could really get some action in the market. One's a little farther out, and that is the next earnings season. It's very common that we get these big runs during earnings season. Then when earnings start and we're not getting as much news with stocks, we start to see a little more a little less volatile action in the market. And our last earnings season has died down now. Next earnings season starts in mid-July, so that's about a month away for that. So what are the other potential market catalysts? One would be any kind of geopolitical news that comes out, anything related to inflation. But June 17th, 18th is when the next Fed meeting is. So not this week, but next week. So that could provide a real catalyst in either direction. My expectation is probably next week, maybe we see a little more range-bound action, but then we could get a breakout or a breakdown the following week when we see what happens with the Fed. And even if the Fed's kind of a nothing burger where they don't tell a whole lot, nothing really changes, which has been a lot of them recently, just having that out of the way. Sometimes the market's a little nervous going into the Fed meeting, but then even if the Fed doesn't say a whole lot, just the fact that it's out of the way and we don't have to worry about another one for a while until September, I think it's September, the market will run because of that. And then, of course, if there's bad news, that could put a little bit of a wrench in what we're seeing here. So keep an eye out on that. Remember, the week after next week is Fed week, and of course things can come out of the woodwork that we're not even expecting. So range-bound action, under the hood, we're seeing strength, so especially in speculative spots. That's good. And then remember, Fed week is coming up. And if you guys have any questions related to this, let me know. You can put them in the chat here. All right, let's do some industry analysis here. And before we even do the sorting, let's take a look at Artie. That's AI. AI, quantum computing have been very strong after getting hit very hard. Essentially, throughout 2024, especially late 2024, and we can use this ETF as kind of a guide here. Notice how strong it was. A lot of the AIs were leading the market. When the market started to pull back, and even before the market pulled back, we already started to see AI pull back and then pulled back much stronger than the market did. So it was showing relative weakness, but now recently has started to show relative strength. So our AI list, a bunch of those AI stocks that we're watching, we have an AI spreadsheet we use that has more stocks than what's on this list. But even this AI list here that I've got has been showing a lot of strength recently. So obviously keep an eye out on AI stocks or anything AI related. I think we might have talked about this in a recent Coffee and Stocks as well. Remember that it's not only the pure AI plays, the QB, and quantum computing plays. So, the QBTS, which look how strong it is, the IONQ, which has been very strong, and these are more related to quantum computing. We have, of course, AI. We have SoundCloud. This would be a more of a pure AI play. PLTR in government and defense, more of a pure play as well. So we have these types of plays, but also look at the indirect AI plays. And sometimes these things will even do much better than the pure AI plays. So I think the example we used last time, those of you who were at the last one, where we kind of went into the history of this type of stuff, you go back to the 1800s, the late 1800s, when railroads were essentially the technology play. It was the new technology, the Industrial Revolution, right? You had the railroads, and of course, if you invested in the railroads, you did very well. But even better than the railroads were the indirect plays, the infrastructure type plays. So the not only the railroad companies, but those who provided the steel to the building of the railroad and the railroad cars, right? So steel companies on fire during that period, and then also when you think of energy, coal was on fire during that period, even more so than the railroad companies. During the internet boom, it was the same thing. You had the pure internet plays like the Yahoos and a bunch of those other companies back then in the early 2000s. But you had the infrastructure plays like Oracle and some of the other ones. And that's what we're seeing now as well. When you think the railroads, there was steel for the building infrastructure, and then there was coal for the energy. It's the same thing now with AI and quantum computing. You have the pure plays, then you have the infrastructure plays, which is essentially a lot of the semiconductor type plays and the cloud storage type companies. And then you also have the energy type plays, which would be like nuclear energy and energy. And we have a big list of energy stocks that we're watching related to AI as well. So it's not just the pure AI plays, it's these kind of indirect plays as well that you should be watching, and all of those are doing very well right now. So related in our industry analysis, of course, we're looking at that. And let's take some of the let's sort the industry indexes in TC2000 over the last 230 days. And if you don't have TC2000, you can do something very similar. Just go to Finviz, which is free. Some of your brokers, whatever you're using, will have some kind of industry groupings as well. Those of you who are using Thinkorswim doesn't have industry groupings, but you can use Finviz. That's fine. So you can see here, utilities independent. That's exactly what we were talking about. Now, when you look at your industry groupings, most of the industry groupings you have are not going to have AI or quantum computing. They're going to be kind of spread out. These companies are going to be spread out through software, through computer systems, through semiconductors, through energy, and so on. That's why I've created my own energy grouping. But notice here, when we look at number 2 and 3 and 4 on this, utilities, computer systems, semiconductors. This is all related to AI. Again, utilities independent, that's that nuclear energy and the energy companies that are powering quantum computing and AI. Computer systems and semiconductors, the backbone of AI, like the railroad tracks, kind of, if you think of railroads as an analogy. So very strong. Notice here's software infrastructure as well. Notice pure software is not on this list, and that's where the kind of pure AI companies would probably be located in. And it's really these backbone type plays that are very strong. So really pay attention to these areas: utilities, computer systems, semiconductors, software infrastructure, electronic components as well. All of this related to AI. Notice silver, metals have been strong, not only silver and gold, like the precious metals, but also the other metals as well. Steel, if we look at steel companies X, notice the big breakout last week. STLD, this was related to some tariff news that the market liked. We're in STLD right now, and we have the breakout pullback here. But so you have the precious metals, but also metals and mining, very strong. If we look at GDX, related to gold and silver mining, very strong as well, an area you should be paying attention to. Metal fabrication, again, kind of indirect to the metals themselves. So all of these companies doing very well. Then notice here, engineering and construction. And if you're wondering what would that be related to, and look how strong it is. It's all-time high. We were talking about this in the swing service just a couple of days ago, that this might be a tell that housing is about to break out. Now, if you look at XHB, notice XHB is lagging a lot of these other charts we were watching, which are way up here. XHB is off the lows, which is good, and has made a nice run and pulled back, but overall, kind of a lagging industry. But when we look at engineering and construction, this is essentially engineering and construction. Most of these are related to housing. So we can see here, this has already started to move, and this could be a tell for the housing sector. So I would start watching some of the pure housing plays very closely, like Toll Brothers, Lennar, DHI, and so on. We see a lot of this in the engineering and construction stocks, and also in building materials. Again, building materials for those companies. And some of those stocks are putting in the same charts as engineering and construction. So I'd be watching some of these AI plays and industries related to AI. Watch metals, both precious metals and industrial metals, and housing as well, and then retail and travel. And notice here's airlines, here's leisure related to travel, airports related to travel, and then department stores. We have leisure also related to retail, and travel. Then we have auto and truck dealers, again related to retail. So retail has been really picking up as well. So these are the areas I'd be watching very closely. Here's another retail with luxury goods as well. So these are the areas I would be watching very closely right now. All of these areas very strong in terms of a lot of our stocks that we're watching on our watch list are coming from these industries, and a lot of the momentum stocks are coming from these industries. All right, so we've got our market analysis. We know the key industries we should be watching. Let's talk about some stocks now. Let's start with Tesla, because that's been the big news event over the last couple of days. Notice here, if we look at Tesla, first of all, the overall pattern throughout 2023-24, not doing a whole lot, had this big run up related to essentially to the election. Notice everyone knew Elon was tied to Trump, that the pairing would be good for the company, and you can see how well it ran. Pulled back. Don't remember the reasoning. My mind's blanking. Maybe it's some of the tariff. Actually, tariff wouldn't impact it too much. I don't remember why I pulled back, but it pulled back, made a little run up, and now getting hit hard. One thing to notice here is if we look at revenue and earnings growth, I have a chart here. Here is the revenue growth. And notice that for all the news and all the stuff we see with Tesla, revenues have been revenue growth and earnings growth has been declining in this company. So forget about all the news, forget about Elon, forget about the big run-ups and rundowns in stock price. What hasn't changed is the trend in revenues and the trend in earnings, which is not good. So even without all that, there's a reason this was happening here before it got really volatile related to Elon and the government and Trump and all that. It was not moving since essentially 2022. And you don't think of that because you think of this as Tesla, one of the leading companies. But we can see it's essentially been in this slight downtrend for a good 2 years before all this stuff happened. And that is because of the lack of revenue growth. Now I'm remembering why some of this popped. So it's essentially been going up when it does go up on expectations of the future. And one of the big things is Tesla's getting more competition now, not only just from electric car companies, but the big auto retailers have caught up, right, with their electric cars. Ford, GM have a lot of great electric cars now. The luxury brands, Porsche, BMW have a lot of electric cars now. So there's more competition for Tesla. So obviously that's a big part of their lack of revenue growth. But when they came out and said, one, that they were going to create cheaper cars, which will compete more with Ford and GM, that created some excitement that there was more potential for revenues in the future, even though now we're not seeing it. It's having some of the worst revenues it's ever had. And then all that robo-taxi stuff. So a new kind of service and business for a revenue stream, right? So even though revenues are going down, there's been thoughts that in the future there could be increased revenues. And then, so that's kind of what all this is here. But we know the last 2 days, 3 days, this has essentially been the little war between Trump and Elon. And of course, a company doesn't want to see something like that. Especially, it was already starting to dip when that started. But then when Trump came out and said, maybe we have to rethink these government contracts with Tesla, that obviously had a huge impact on the company here. And you can see the big decline here. So now, why are we watching this very closely? Because overall, the chart tells us ugly chart. We don't even want to be thinking about Tesla right now. The reason I want to watch it is oftentimes when these kind of near-term news events are playing out, you get these big dips in the stock, but at some point there's going to be a very good buying opportunity. These are short-term overreactions, and then you see a big move in the stock, and that's what we're going to watch for with Tesla. We've had a number of stocks that have done this over the past 6 months to a year. CrowdStrike is an example I like to use here. If you guys remember, back in 2024, CrowdStrike was on fire. Software and cybersecurity stock has a lot of government contracts as well. You can see from 2023 to 2024 was a leading stock, ran from 90 to 400, and for good reason. Had strong revenue and earnings growth. And then you can see here the huge, very quick, where it went from all the way down to 200. So a 50% move down in less than a month. That was because of the big software glitch that impacted the world. It impacted banks, airports, and so on. And we had this big decline here. We were talking about this at this time. Nothing fundamentally has changed in the company. Still a great company. They had a little glitch. They're going to fix it, and the stock will come back. That's exactly what happened here. And this was such a great opportunity. Look at the bullish when it was dropping. You want to stay away from it. Be patient. You had the really strong bullish engulfing candle right here. That was a good indication of capitulation. And if you didn't play that, every time it cleared one of these moving averages was a spot where you could enter. And then here it finally cleared the all-time high. Did pull back with the market here. But now look at it, very strong. We've got the W pattern. We're looking for a good spot to re-enter this one here. Now, if we look at Tesla, maybe Tesla's a little more complicated in the sense that, unlike CrowdStrike, which has huge earnings and revenue growth, and there was very good reason for the stock going higher, there were already concerns before all this with the company. But still, it's one of the most watched companies, one of the most traded companies. And at some point here, maybe if there is a resolution to what's going on with Elon and Trump, or if this just dies down, maybe we'll get an opportunity like we did with CrowdStrike. So this isn't saying we should jump into this now, but I would watch this and just look at the price action and see if there is some kind of capitulation event that gets us into this stock for a good trade. I got a question here from Aaron. Can you show the revenue and earnings growth? Notice here the revenue and earnings growth has declined recently, but during that period, it was very strong. All right. So that's Tesla. Now let's look at some stocks to watch to potentially trade next week. I've got probably 50 stocks that I like right now. I'm just going to go over 10 or 15 of them. Let's start with big tech. And I'm not going to go through all of them that we watch. I'm going to just point out three of them. One, we are in Amazon right now. We're actually in NVIDIA right now, as well as semiconductors have been coming back. Yeah, QBTS is on our list. Meta here, very extended, looking like it's going to break or at least test the all-time high. Extended right now, so we're looking for a consolidation or a pullback in Meta, but Meta is definitely on watch. Same goes for Netflix. Netflix, you can see, broke this range and is floating higher. We're looking for a pullback for a potential entry in Netflix. So those are the two I'm watching the most closely, but they have to set up. We're not looking to trade Google right now, not looking to trade Apple right now, which has an ugly chart right now. I'll just pull it up here. We can see Apple has been lagging. Still a lot of concerns related to China, and the tariff stuff got hit the most related to that. And I probably wouldn't touch Apple until it got up over the 200-day moving average. Let's start with our list. Let's start with the AI stuff. So we'll go with QBTS here since it was talked about. Notice here, first of all, before we even look at price, look at all this good volume and accumulation. All these big green candles, no real red candles that match the green candles. That's a good sign of accumulation. Our CMF indicator, money flow indicator above the zero line, also indicating accumulation, recently broke the IPO high. And that's a very good signal. Oftentimes you get these big 100% moves, 50% moves when you get the breaks of the all-time IPO highs. And that's what we're seeing right now. We're seeing a consolidation here. I considered entering it actually on Friday when it rebounded the 9 EMA here, but I decided I'm going to wait for a break of the high here. So my trigger for QBTS, where it's almost there at about 1925. That would be the entry for me here for QBTS. A couple of the other, I mean, there's a lot of AI and quantum computing stocks watching right now, but one of the energy plays, the nuclear energy kind of backbone plays, Oklo, OKLO. Notice here, had a big run up, a big pullback that has lasted for most of 2025, ran up to the high, and not surprising that it stalled at that level. There's so much supply at an old high. A lot of people that were holding here sell their shares, just trying to break even. You get a little bit of a pullback. And now the question is, do you anticipate the breakout and enter here or wait for the breakout? I think either of them are equally valid, but I definitely like Oklo. You could either enter here with a loose stop and see if it breaks the high, or just wait for the break of a high. But really like Oklo, one of my favorites here. CEG just recently had a big contract with Meta. So they're going to be providing the energy for Meta's AI stuff. And it was interesting that it started to break out on that news, but it became kind of a sell the news event after this huge run up. So I would stay away from it right now and just see where it consolidates and finds support. But once it does that, I would definitely consider CEG for a potential entry as well. IONQ, another one here. Breakout pullback, watch for a remount of the 9 EMA, which is my yellow line there. ANET, this one related computer systems, related to AI as well. Notice here has had a huge multi-year momentum run. Every pullback was a buying opportunity. Had the deeper pullback here, but has come on strong now and is remounting the 200-day moving average finally. And that's a good spot where the institutions will start to come in knowing that it's above the 200-day moving average. So I'd be definitely watching this. If you're really aggressive, you could just enter here. Very low risk, high reward. And in terms of, let's say you used 100 shares and you got in here and you use a 5-point stop, so you're essentially risking 500. You could target not even the high, but this range right in here at 120, and you're talking about almost over 20 points of potential gain for 5 points of risk. So essentially risking 500 to make 2,000. So very good risk reward here with ANET. We have road, engineering and construction, again, backbone to housing. And you can see here at all-time highs. And a little extended here, running and broke the high here. I'd wait for a little, see if it pulls back to the 9 EMA, but a stock that is definitely on watch for next week. ASML, semiconductors. This one has been lagging quite a bit, but has now remounted 200-day moving average. And notably, a lot of money flow. Look at the CMF indicator has not only got up above the zero line, but is staying above that level, which is a good clue here. So I really like this as a potential big runner. AMD, and I skipped AMD on the big techs, but AMD has semiconductors has a very similar pattern here. And I think once this breaks up over the 200-day moving average, we could see a big run in AMD. HIMS tested the all-time high, has consolidated now, and will, I think you could enter on this consolidation, or if you want to play it a little safer, wait for a break of the high. SoFi in fintech, you can see here in credit services, you can see here had the big run consolidation. I think it's a decent entry where it is now. Carvana, a little extended, but definitely on watch. Fix, another engineering and construction stock. Another one where we need a little bit of a pullback, but looks very strong right now. And then RL, Ralph Lauren testing the high here and pulling back. Another one, tested the high. We're going to watch the consolidation and see if we get a good entry. We recently entered Uber here. You can see This is the box breakout. We've talked about this in past Stocks and Coffee, the specific setups, both the fundamentals and the qualifiers for what a box breakout is. But we got the box breakout here. And notice when we get these box breakouts, the oftentimes instead of just making the big run right away, you get a pop that's tradable. You get a pullback that tests that box. And then when you see a strength, when you see strength there, that's where you want to enter. And that's what we did on the remount of 9 EMA. And our expectation is now we're going to get the big run in Uber. So really like Uber as well. And that setup is still there as well. All right. That's what I wanted to go over today. And again, those of you who aren't Swing Service members, remember you can get a free trial here. There's the chat where we're talking, of course, every day. In here, the reports that come out every day, video reports, and of course the trade alerts as well. If I'll do a little Q&A if you guys have some questions right now. Otherwise, we can get to our weekend. It looks like Vince wants me to look at APLD. This is a stock that is not on my radar. I don't think I've ever looked at this one. APLD, capital markets. My first reaction to this is obviously very strong move. Look at all this volume that came in. When I see this, I generally want to see why it's moving like this. You know, we focus more on the technical analysis, but it's good to know the catalyst or the event. So I'd probably look at that, and I'm not aware of why this thing is moving. A lot of volume coming in. And I'd also want to know, was this heavily shorted and is this a short squeeze? If it was a short squeeze, there's a lot of potential for a big pullback. But I wouldn't enter here just because it's so extended right now. But we see the old high is around 10 or 1050, and it's at 1386. I think this is a really good candidate for a pullback play if it does pull back, but maybe a little risky to enter where it is right now. Lance is asking Avgo on a remount of the 9 EMA. I like Avgo a lot, and it's related to AI and semiconductors as well. A little extended overall. Pulling back to the 9 EMA, yeah, that's exactly right. We want to see here, it's very extended. It could pull back deeper. There's two areas I would watch. One, if it finds strength at the 9 EMA, you're okay with an entry there with a stop just under this candle. If it pulls back deeper, watch this consolidation range right here. It's consolidated for a couple of weeks here, right around 233. I would watch that level as well. All right, guys, that looks like the extent of your questions. So we'll do another one of these maybe next week or the week after. Those of you who are in the Swing Service, we're going to have a couple of pop-up mentorship sessions next week. So be on the lookout for that Monday or Tuesday, and we'll go over more of the credits or debit spreads that we've been going over as well. All right, guys, talk soon. Have a great weekend.